Now, when it comes to high yielding ETFs, for the most part at least, I'm a big fan of sort of the normal, boring, common ones like QYLD, names like JEPQ, names like JEPI, even XYLD. Names like SPYI, QQQY, more or less the index-based covered call style or buy right style ETFs that offer exposure to either the NASDAQ 100 and or the S&P 500 with an option overlay for a ton of income. But over the past year or so, I've also been adding a lot more alternative higher yielders to my portfolio that don't necessarily track an index, but instead buy into a basket of holdings, a curated one, and then use options to generate a ton of income also. So in this video, I want to share with you guys my 5 favorite ETFs that do offer a nice high starting yield that might be more alternative, less common if you will, but super high quality in my personal opinion. Now these ETFs are going to range from yields anywhere from 7% upwards to 20+%, so there is a boatload of cash flow to be made from basically all these. So if you want to see which 5 ETFs I'm talking about, well then make sure to stick around, drop a link down below, and let's get right into the first one. My A to Z Dividend Investing ebook has helped countless dividend investors get started with their journey. And my custom dividend tracker that I'm constantly using here on the channel has also helped so many investors stay on track and allow them to see their dividend income in real time. Well, today I have another treat for you guys. I'm not only going to offer you my A to Z Dividend Investing ebook and the custom dividend tracker, but also just for a short limited time, I'm going to be adding in my brand new weekly dividend blueprint ebook to show you how you can get started with weekly dividend ETFs and add this into your investing strategy. This offer is not going to last long, so go ahead and click the first link down below in my description, and you're going to get both ebooks and the custom dividend tracker bundle. But like I said, please act fast because this won't be around for long. Now let's get back into the video. So the first sort of uncommon, I guess less traditional, newer ETF that I've been buying like crazy as of recently is QDVO, or the Amplify CWP Growth and Income ETF. Now this ETF has an objective where it seeks to provide capital appreciation and secondarily high income potential. So this is actually sort of backwards to my personal investing strategy. I'm more so looking for dividends and dividend growth and high yield, and then secondarily looking for capital appreciation. But because this ETF offers a ton that I actually like a lot, I have been adding a lot of shares to my portfolio over the last several weeks. Now, QDVO does not track an index, does not buy into the S&P or the NASDAQ or anything of the sort. It actually just buys into sort of a random basket of holdings. Some names in here are going to be familiar, some less. I mean, names like Nvidia, Apple, Microsoft make up the majority of the ETF. But what's cool about this ETF is that it also individually sells call options on some of their holdings, which is how this ETF offers such a high yield, relatively speaking. Now, as far as yield goes, QDVO has a distribution rate of around 10.29% as of right now. QDVO costs around $20 per share, more or less, and as of recently has been paying around 20 cents more or less per share per month over the last several months. Now, I'm also a huge fan of DIVO, like you guys probably know. I've been holding on to shares of DIVO for a long time now. So QDVO is another ETF in the Amplify ETFs basket, and is definitely one worth looking into if, once again, you do want exposure to a small, curated, high-quality basket of holdings, and then with that cover calls, etc., etc. The next ETF that's sort of alternative, you don't really hear about it as much as some of the other super popular ones, but I still do like it and I still do hold it, is BALI, or the iShares Advantage Large Cap Income ETF. Now, the investment objective for this one is the iShares Advantage Large Cap Income ETF seeks consistent income with lower volatility than the broader US equity market. Now, before we talk about how much income this ETF is going to offer, looking at the holdings, we're talking names like Microsoft, Apple, Nvidia, names like Amazon, Google, Walmart, all together over 200 different individual stocks in this ETF. So again, it's not necessarily the S&P or the NASDAQ, but there's a lot of high quality names and a lot of overlap with both those indexes. Now, as far as yield goes for BALI, we're talking a 7.5% trailing 12-month dividend yield, so not the highest yield in the world, but again, you are getting exposure to a benchmark index more or less of the S&P-ish. So you are getting super high quality names with, of course, the option overlay to enhance the income. The next sort of alternative ETF that does yield a ton, we're talking 25+% distribution rate, is FEPI, the Rex Fang and Innovation Equity Premium Income ETF. FEPI's been around now for a while. It's been trading for well over a year. And like a lot of you guys probably already know, FEPI buys into big tech, which as of recently has not been doing too hot. And then along with that, writes cover calls to generate a ton of income. Now, because big tech, generally speaking, is super high beta, there's going to be massive option premiums correlated when it comes to big tech. So this ETF is going to offer a ton of enhanced income potential, just like it has historically. Now, some of the top names in FEPI are names like Netflix, Palantir, we have names like Intel, etc., etc. Now, because the FANG Innovation Index is going to offer a lot of exposure to these super high beta names, Like some of the ones here, this ETF is going to have the risk for massive NAV decay if we see the market or the underlying holdings drop in price. Now, along with that, FEPI's actual distributions have been getting smaller and smaller over the last several months as well, which is why for me personally, I always use names like these that apparently offer a distribution rate as high as this as a smaller portion of my overall portfolio. Now, all of this to say that if the underlying names, some of the big tech names do very, very well in the next several years, FEPI does have a chance to offer a ton of income potential and even some upside at that. Now, out of all the equity premium income ETFs out there, this would be sort of a more or less riskier one just because, again, the underlying is big tech, so you could get some bigger swings, etc. Not necessarily as common as some of the others, but IYRI, or the NEOS Real Estate High Income ETF, this is a newer ETF that I'm absolutely obsessed with as of recently. That's because this ETF offers exposure to super high quality REITs inside the Dow Jones US Real Estate Capped Index. But then along with that, you guessed it, offers a data-driven call option strategy. Now this ETF has only been trading for a matter of months, but at least so far has offered investors somewhere of around 50 cents more or less per share per month, which gives this ETF around a 12% yield. Now I'm not only obsessed with the actual strategy and the distribution rate that this ETF has offered so far, but some of the top names in this ETF are some of my all-time favorites. I mean, American Tower Corporation is one of my all-time favorites. Realty Income stock, as you guys know, I have a crazy amount of that stock. Simon Property Group is also one of my favorites. Public Storage. I personally absolutely love a lot of these real estate names. So along with the option overlay, there is a ton of income potential, along with having exposure to some of my favorite names across the REIT sector. Now, last but not least, I'm sure you guys have heard about this one by now. It's kind of going crazy across the dividend investing community. OMAH, or the VistaShares Target 15 Berkshire Select Income ETF, an ETF that generally invests in the 20 largest holdings of Berkshire Hathaway BRK.B, as well as offering an option overlay. Now, this ETF is not only going to give you exposure to some of the biggest names in Berkshire Hathaway, which honestly, who doesn't want exposure to that, but also along with that, this ETF offers around a targeted 15% yield, which at least so far since it's been trading, it's only been a few months, it's right on spot. Now, just like all the other ETFs we talked about, super high quality top holdings and also an awesome strategy to offer a ton of income potential. So there we have it, guys. Those are 5 different higher yielding ETFs that aren't necessarily as common as some of the other very common ones you see across the dividend investing community, like JEPI, JEPQ, QLD, SPYI, etc., etc. Now, out of all 5 of the ones we talked about, I do have a question for you guys down below. If you were to have to pick just one of them, which one would you pick to buy into? Let me know in the comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.